Now, insurance uptake in Kenya remains low compared to other key economies, with penetration coming in at 2.3% as of December 2020, according to the 2021 Financial Stability Report by the Central Bank of Kenya. The low penetration rate, which is below the global average of 7.4%, is attributed to the fact that insurance is still seen as a luxury and mostly taken when it is absolutely necessary or a regulatory requirement. Insurance penetration in 2020 remained equal to 2019 at 2.3%, despite individuals and businesses cutting back on optional expenditure, including insurance, in the face of income volatility in the COVID-19 pandemic environment. Now, this week on Moolah Insider, we dig deep into some of the challenges that surround the sector, both from the insurance consumers as well as the providers. We'll also tell you some of the things to look out for before buying any health insurance policy. My name is Margaret Wahito. But before that, we start with our key highlights. Standard Chartered Bank Kenya has declared a 5 shillings per share interim dividend after reporting a 46.7% jump in net profit for the 9 months to September 2021. The bank recorded 6.35 billion shillings profit after tax from 4.33 billion posted in a similar period last year. The growth has been attributed to a 33.8% rise in foreign currency trading to 2.53 billion, helping shore up the non-interest income. The lender paid out a final dividend of 10 shillings and 50 cents per share, despite a fall in profits for the full year ended December 31 to 5.44 billion shillings. Meanwhile, most banks are yet to resume lending to private sector despite the steady recovery of the economy compared to last year. The lenders made huge loan provisions following the economic downturn, but have since reduced them amid increased loan recoveries. And now to our main story of the week. Good health is such a foundational matter in life, since without good health, it becomes difficult to achieve any important goal. This simple yet profound fact is a driving force behind an ever-growing health insurance sector, not just in Kenya, but the world in general. The health insurance sector in Kenya has several types of policies targeting the general public. These plans are devised to meet the needs of Kenyans seeking medical covers for their families and companies needing to cover for their employees. However, despite the various health policies available in the market, what determines the policies you'll take and that fit your healthcare needs? Let's take a look.
At some point, we fall sick. And at the time that we fall sick, it is unexpected, and we are least prepared. Hence, the essence of insurance, medical insurance. You pay some little money for a very wide cover. And there are many of you who do that with the hope that out of many, one may fall sick and benefit out of the contributions of many. Let me dispel the myth that insurance companies are there purely for making money. Of course, any business concern would look at money making at the end of it, but it is not the main driver. Imagine a situation where, as I had mentioned, you happen to fall sick. And this normally comes when you are not expecting. What would that mean to you in the event you didn't have insurance cover? Of course, it is your pocket and your family's pocket. So that is when the reality dawns on you, that indeed insurance is important. The first element is the size of your family. You consider the type of cover that you want, because there are limits. There are covers that can go up to 20 million, 100 million for inpatient, depending on the person and their status in the society. You get covers as modest as 0.5 inpatient, 50,000 outpatient. So you have to consider the amount or the limit of cover that you want, the type of hospitals that you want access. Because if your target is a Nairobi hospital, It will be different from Nairobi women and probably Nairobi West. So the number of covers, of course, when there are two, one is given by the employer of the wife and another one employer of the husband. Those will come into, we call it contribution in our terms, but they will share the liability depending on the preference that you have. So you have the family to consider. You have your requirements. What do you want and what is your capability? Because it is a paid for service. You also have to consider the propensity or the predisposition of your family, because families are not the same. There are families that can go throughout without visiting hospital and there's cover. There are families that have got certain hereditary issues. Premiums are determined by a number of factors. One, the limit of covers. Because when you have a cover of 20 million, naturally it can't be the same as a cover of 1 million. So the limits will determine the premium. Size of the family. If you have a family of two, a husband and a wife, and a family of 2+ dependents, that brings in a difference. It will also depend on insurance companies because the premiums are not standard. It's an open market. You fish out and see which companies are good for you. So you can go to 5 different companies and you get slightly varied cost for medical. Of course, the hospitals to be accessed will be determined by the limits and your status in the society. So all those factors, and also there's another thing that I've not mentioned. Under medical, we have what we call options. Like a standard medical policy, maternity is not covered. Some policies cover the first cesarean. So you may have an extension of maternity beyond the required time. There are certain conditions that may not be covered in a policy, so you buy those back.
And still matters on insurance. The insurance sector in Kenya has continued to suffer from low penetration rates worsened by the pandemic and its effects on the economy and Kenyans' disposable income. According to the latest half-year 2021 insurance sector report, the low penetration, which stands at 2.3%, is due to factors brought about by the consumers, insurance providers, and other industry players. Now, one of the leading challenges is fraud. Now, recent years have seen an increase in fraudulent claims, especially in medical and motor insurance, with estimates indicating that 1 in every 5 medical claims is fraudulent. This is mainly through inflated medical bills and hospitals making patients take unnecessary tests. In the first half of this year, 45 fraud cases were reported, with fraudulent motor accident injury claims accounting for 15.6%, followed by theft by agents at 11.1%. Another challenge is a shrinking trust from insurance consumers. Now, during the period, Insurance Regulatory Authority received 819 complaints lodged against insurance companies by policyholders and beneficiaries. The complaints range from insurance companies failing to settle claims and constant bargaining over terms of insurance contracts. This has fueled public mistrust of insurance and increased insurance apathy in the country. There also exists cutthroat competition. The local insurance sector is served by 56 insurance companies offering the same products despite low insurance penetration in the country. The battle for market share has seen some insurers resort to underhand methods of gaining competition advantage, such as premium undercutting. Now, undercutting is when an insurance company secretly offers clients unrealistically low premiums in order to gain competitive advantage and to protect their market share. This is also the major driver of underwriting losses suffered by the industry. Last and not the least, insurers in the countries have been facing losses in their core business following the increase in claims outpacing increase in premiums. For instance, general insurance claims increased by 15.3% to 32.4 billion shillings in the first half of this year from 28.1 billion shillings in the same period last year. On the other hand, premium for general insurance business grew by paltry 6.3% to 48.6 billion shillings from 45.6 billion shillings same period last year. Now next is our word of the week. Our word of the week is continuous insurance. Now this is when a policy holder has been insured by one or more insurance companies without any lapse in coverage for a specific period of time. You're watching Moolah Insider, and to watch our previous episodes, please remember to log on to www.moolah.co.ke or link with us on our social media pages. Now next is Pursuits. About 5 years ago, Wallace Waiguru took a bold step and ventured into the deep end of running his own business. In Pursuits this week, we found out why he left his full-time jobs to do this.
Hi, my name is Wallace, founder and designer of Eden Leather. We're an African brand that produces leather goods and accessories for both retail and corporate using locally sourced materials. Eden started in 2017 as a side hustle. At that particular point, I was employed. And I realized there was a need for a brand that focuses in leather that would appreciate and people would want to adapt with. And that's what really inspired me to start the business. I actually had to look and do my research and find out how the bags are being produced, how this kind of goods are produced, since it was something new for me, especially being in the creative industry for quite some time, but not into fashion. I remember I produced my first bag and people liked it, and people started to ask me about it, and I was like, you know what, let me start creating one item at a time. And here we are. This is our 4th year now. Starting Eden for me is something that is passion, and I can commit everything that I have to the business. I source all my raw materials from various parts of the country. Leather, would get it from Athi River, we get it from Sagana, we can get it from Thika. It depends with the tannery that we would have the leather itself. When it comes to our fittings, we usually use brass fittings, which is ideally made from brass, which is recycled brass. So we have craftsmen in Ongatorongai. When it comes to fabrics like canvas, we get from companies in Kenya who produce the canvases. We combine everything together and create a unique product. For me, quality is really, really crucial. The attentive to detail and the craftsmanship is really important for me. When I first started, actually, I had no machinery, I had no capital as such. So what I did was just a bit of savings. So what I did, I used to subcontract people to produce for me. I'll give them the designs, the patterns that they create for me. Then slowly by slowly, I started to buy one machine after the other. Selling 2 items, try to save here and there. Now we're fortunate to have at least a couple of equipment that at least are able to create a product from starting to end seamlessly. I took a loan when I was employed to fund the business itself, which for me was a move that I had to make for me definitely to go to the next level. Because reached a point I was like, I need to have my own space where I can create products with a team of people who are dedicated to producing it. It really helped me to push myself to the next level. If there's a capacity of someone for banks to be able to assist people to even make their business plans better, I think for me it would be a win. 80% of our clients are through social media. All our inquiries are usually done from social media. So what happens basically most of the time, I create a product, I take a photo of it, I upload it online, and people start inquiring about it. Well, our plan is to now adopt into a kind of a walk-in setting, which was basically our strategy for this year. Most of our clients usually inquire online. We we design the products for them and we deliver for them. I remember when I first started, when I used to tell people I've created this product have been produced in Kenya, people wouldn't believe it. It was a really hard sell. But I think people are becoming more open, and people are becoming proud of Kenyan-made products. I envision myself exporting to the Western world, but of course there are a couple of challenges that we go through, especially as SMEs. One is, okay, how do you connect yourself to people in the Western world, and basically getting a link, basically a link, or I don't know, do I call it an agency of some sort, that can connect you with clients in the Western world and be able to make business with them. When COVID-19 came, it actually caught us unaware, especially us being more or less like a luxury brand, because people who buy products either to use them socially. So we had to really adapt. So what we had to do first is to adapt into producing essential products. So we started producing masks, 3-play masks, which we actually helped us to to sustain ourselves during this process. We're actually been doing protective clear films for taxis, just to protect the driver from the client. So just trying to adapt into producing essential products and PPEs. In the next couple of years, being an African brand, with having different outlets within Africa, my model would be to have small workshops where people can learn the craft itself, and also get empowered and at least also earn an income from it in different parts of Africa. Safaricom have given us a couple of opportunities to work with them, and we're really humbled, and for us was something that we are always honored to have protected in creating merchandise for them. Consistency. I think being consistent with what you're doing every day really pushes you to the next level. Every day I learn something new, but being consistent about it and doing it again and perfecting it, for me, is what I can advise someone. The rest of the things just follow in.
Now let's take a look at the leading indicators this week, starting with the stocks and the foreign exchange. Now next, we look at the prices of basic commodities in our various supermarkets this week. That's all we had for you this week on Moolah Insider. Please remember to watch our previous episodes on www.moolah.co.ke or link with us on our social media pages. My name is Margaret Wahito. See you next week.